Hello and welcome to The Weight of Freight, where we explore the intricate yet powerful connections between the freight and commodities markets. And today we're going to talk about a very exciting market, which is the LPG freight market, which has gone a little bananas recently, especially on the VLGC side, and we're just trying to get to the bottom of why it went a little crazy, and also understand what the impact on the trade is right now and is going to be going forward. And for that, I'm joined here today by my lovely colleague Yohanna Pinheiro, just to get to the bottom of it all. Yohanna, welcome.
Hi Alex, thank you.
Great, so let's just jump right into it. We've had quite an interesting few months for the VLGC freight rates, and VLGCs, for those who doesn't know, is the biggest ladies in the LPG fleet. And we've had historical highs in September, I think for all the main routes like Rastonura to Chiba and Houston to Chiba, for example. Then it crashed back down late in October, and now it's creeping back up. What's driving this volatility, and how did we get to the historical highs? Let's start with that.
It's been quite a ride, Alex, and what we see here is a series of factors at play that involves both the main suppliers, which are the Middle East Gulf and the US Gulf. Why are we seeing the production fall in the Middle East Gulf? Because of the oil production cuts and LPG as a byproduct of that production. In the US, we've seen the opposite. The production, the inventories there are multi-level highs because of the natural gas production. So because in the natural gas production, they get propane as well, even if they inevitably find it, so they are trying to push that out. So you see that a lot of cargoes coming up from the US and not as many in the Middle East Gulf. But what really was a key player here was the Panama Canal delays, because the delays started to rise there, which disrupted the flow from the US Gulf to East Asia, the main consumer. So there, prices is starting to get higher because there were other costs coming into. So because the prices were higher, starting to grow in the US Gulf, lots of the ships that were in the Middle East Gulf went to the US, attracted by that fairly secure premium that were there about $10,000 to $15 per day compared to the Rastonura to Chiba.
Right. So basically, if I understand you correctly, what you're looking at here is kind of a imbalance in demand. For one, we have less stuff coming out of Middle East, going to Asia. At the same time, we have more stuff coming out of US Gulf Coast, and this is a much longer voyage already, isn't it? And then there are delays in the Panama Canal. I think that's which hold up the vessel. I think it's important then to understand how these delays actually impact the vessel and why they happen as well. Yes, so as we all know, the Panama Canal is a bit of a marvel of engineering. So that means that you have to bring the ship up about 25 meters up to the Gatun Lake to cross it over via the series of locks and then put it back down. And the Gatun Lake, especially during the drought, can get a little too low on water, and its water is required to operate the canal. I think it's an important piece of trivia for everyone who doesn't know. Right, so the ships are stuck waiting in the Panama Canal, and that means that they're not available for other business in the LPG market, right? Restricts the supply, the prices go up. Is that
exactly? So the supply was stretched out, either because they were held up the longer delays in the Panama Canal, which got to 16 days, or they just gave up altogether to go through the canal and went through a much longer route through either the Cape of Good Hope or the Suez Canal. And so the vessels were busier for more time. So it took a longer time for us to see that rebalance again. Because when charterers in the Middle East Gulf went back to the market and saw no ships, that's when the rates first shot up. And a wide arbitrage in the U.S., because of the production levels have been so high, secured that the levels were the arbitrage was still wide enough for the rates for vessels to grow a little bit more.
So in other words, the arbitrage from the US to Asia is wide enough to allow for even much higher freight rates, which happened in September.
Which
right?
happened.
So why the crash then later? Has the arbitrage closed?
No, that would be a total disaster. No, that we see the arbitrage slightly tighten, but what we really drove the rates back down was that charters is starting to hold up their cargoes. Freight rates were really high. We've seen also some cargoes being canceled because the costs were already much higher than the usual because they hit record highs. So because the fixing window was so up in the future, mid-November, they held up their cargoes a little while, trying to wait for the vessels to come back there, and so the supply would be enough to soften the rates from the record highs. And in that movement, we've seen the market stabilize because ship owners are still very confident that the demand, we are ahead of the winter demand, is going to keep growing, so they're holding their offers high. What happened there was that we've seen a lot of relets coming into the market as well, and those we've seen them fixing in lower levels than the record highs, so that's when it started dropping again.
Another important piece of context here: what a relet is. Relet is generally a vessel which is run by big charterers, producers, majors who have their own cargoes and use those ships for running their own cargoes. But sometimes they relet them to the spot market when they think that there is a margin to be made. And since everyone wants to fix or give business to a relet, since that usually gives some kind of favor back from the big charterer, they tend to get fixed first, and they tend to go at lower rates as well. Anyway, and that's how they drop the market, which is creeping back up now. So we in another point of volatility. So there's another short-term supply squeeze here on the VLGC rates?
We've seen the supply now being a little bit busier because there has been some cargoes out, and also ships returning to the U.S. Gulf. So we're still seeing it's not as it was in the beginning of this trend, but it will depend. It's hard to say how it will develop because this is a sentiment game here. So owners are really confident, charterers are trying to push back as well. But what we've seen that ahead of the winter, demand is inevitably going to grow. So it's very likely that rates will continue to trend. It's hard to say up to what level, but I think we're going to wait and see.
But again, right now we're talking about all the short-term squeezes, but if we are talking longer term, what do the fundamentals tell us? Is there a fundamental strength in the freight market? Is it going to keep being quite expensive carrying LPG and VLGCs around the world?
So from a fundamentals perspective, a very important factor is the order book. We've seen that this year it has a very large order book with about 44 vessels to come in in 2023. From those, about 8 are still to come online in the fourth quarter. And the last time that we've seen this amount of vessels to come into the market, that we've seen a very big correction over the rates. The rates really dropped very significantly, but there are some differences in the market dynamics that makes this much different. So back then, that was 2015, 2016. That order book was about 20% of the global fleet, whereas now, this is about 12% of the
because the fleet got bigger, so even if you have loads of ships, they take a smaller proportion of the fleet, right?
Exactly. And some of these effects are also expected to be offset by the fact that lots of them are coming in time charters, and also because some of vessel inefficiencies. So we see that around 10% of the global fleet has already 25 years. So they're over 25 years, so they are potential scrapping candidates. So we could see that to keep the rates at current levels or at a higher level, that could prompt charterers to scrap and to maintain the balance.
But here's a question then: if the rates are hot and you can make loads of money in the freight market, and you have an older ship which you paid all of your capital costs for probably, yeah, why don't you just stay in the market and keep, making money?
It's not going to be so easy because we've seen the new vessels have a much higher efficiency rate than those older vessels. Those dual fuels, they are prepared for the certain amount of regulations within the carbon emissions perspective that these vessels are not. Plus other costs that could maybe owners would not be willing to take a risk with an older vessel. They could. That's not going to be that easy.
Yeah, and we see that trend already in the order book, right? The majority of the vessels, if not all of them recently, are dual fueled, which means that people are preparing for the future of fuels and the new realities of what the regulations bring to the table, right? And so and it's much cheaper to order a new vessel with the dual fuel engine already installed than to have it retrofitted, about 3 times or more expensive, and we're talking about millions of dollars here, which is again. So am I getting it right that we should expect, at least for foreseeable future, say the next quarter or 2 quarters, that the rates are likely to remain elevated simply because the tonnage might be balanced between the order book and scrapping potentially for the next year, and because the demand is rising? Is that?
Exactly, yeah, and the demand is already expected to grow. Apart from simply being the high season, the winter demand, we also see lots of PG8 plants in China to come online after being offline. So that will definitely raise the amount of product coming into China. So they need more vessels, and we see that. And apart from that, because it's a high season for lots of other shipments, we see that the Panama Canal delays are also expected to come back up again, and could also bring more complications within the market and raise rates. So for the foreseeable future, until the end of the high season, we don't see a lot of space for rates to go down. We see the opposite.
And that's actually, we're talking about quite a bit of money, because people sometimes forget about how much the freight can take in terms of the proportion of delivered price. And during the top of the recent spike, it was roughly 36% of the price of the FA, Houston to Chiba VLGC rate. So it's a big number which affects the trade. And VLGC market is interlinked, right? So we see similar trends in voyages to India, for example, right? And voyages to Europe. So it's going to keep getting or remaining expensive to carry LPG. So no relief there for whoever is paying the bills, right?
Yes, yeah.
Cool. Well, thank you very much for sharing your expertise today, and thank you everyone for tuning in. You can, as always, download the limited edition file with some slides on what we've been talking about here in the description to the podcast, and we'll see you again on